Our primary shared value is radical open-mindedness. We constantly question popular narratives in search of hidden truths. We believe this is especially useful in venture investing, where capital tends to be dramatically overallocated to startups that align with the strongest market narratives. Rather than chase the narrative, Bedrock's approach is to invest in promising companies that are underestimated precisely because they are incongruent with the storyline. Our starting point, therefore, is to search for narrative violations. That was a passage from the Bedrock Capital letter. Ton of gold in there. I will link to it in the show notes. And if you haven't figured it out by now, today's guest is Geoff Lewis. We talk about his temp checks. We talk about his move to Austin, how it compares to Miami. We talk about performative lunacy versus performative sanity. We talk about the reality dysphoria industrial complex. There is a ton in here that you're going to want to listen to. So without further ado, let's press play. All right, on today's podcast, we have Geoff Lewis. Geoff is a vibe capitalist, founding influencer, and investor. He's the founder and managing partner of Bedrock, a technology investment firm currently managing approximately $1 billion. He's served on the board of directors for companies including Lyft, Nubank, and Workrise. He's also invested in Wish, Vercel, Anduril, and more. Prior to founding Bedrock, Geoff was a partner at Founders Fund and the co-founder and CEO of the technology company Topguest. And subject to today's discussion, Bedrock is credited with coining the phrase narrative violations and narrative mirage to describe the most compelling technology investment opportunities. How are you, Geoff?
Doing well. Thanks so much for having me on, Geoff.
Absolutely. Thanks for coming on. Did I miss anything in the bio?
I think that was pretty comprehensive. Thank you.
So I think the first thing that the audience is going to be wondering is what makes a vibe capitalist?
Let's see. Well, I have this theory that there was this arb in venture capital for several years where there weren't that many folks looking at investing in early stage technology companies, and I became a venture capital investor in 2012. And it's just felt like every year it's steadily gotten just more and more insanely competitive, such that I think today in 2021, if you're trying to invest in private technology companies, there's only a few ways to have an edge. One is speed, just moving extremely fast to make a decision. And then the other is one's individual personality and one's individual vibe and the degree to which a founder and a team vibes with an investor. And so, one of the things that our entrepreneurs at Bedrock always tell us is like, we really like your energy. We feel like we have a special vibe. When we raise our funds and limited partners call our entrepreneurs to diligence us and ask, why do you choose Bedrock? The question more often than not is, we just like the people at Bedrock the best versus the other people. So we're trying to play to our strengths, given we don't have that many, but we think we have a good vibe. So hence the vibe capitalist.
Now, is a lot of that stemming from the fact that there's so much money sloshing through the system? And obviously, you've talked a lot about inflation before it was popular, which we'll get into. But it seems, at least for me from afar, that money is basically been commoditized in the practical sense in venture, that you really have to do things at the margins and do them really well to stand out when capital is very accessible for entrepreneurs. Is that kind of the forcing function of really taking the time and thinking about what makes you special and having that be the vibes?
Well, yeah, I mean, I think it's a big part of it. I mean, I think what we've seen happen in 2020 was there was sort of a chessboard in venture capital. It was, there was sort of a set hierarchy of firms and a sort of set way that folks thought about technology companies and technology investing. And then I think 2020, the chessboard was just completely flipped over, and everyone was trying to figure out how the pieces would ultimately fit together. And so it was sort of this very frenzied, very frenzied year, people trying to make sense of the new world. And I feel like in 2021, basically what you have happening is you have a handful of really smart crossover investors, folks like Tiger, etc., who've really done a phenomenal job of just aggregating a lot of capital, raising very, very large funds at a very rapid clip, deploying them very rapidly. And I think that they've basically sort of are now dominating the game in venture capital, and that sort of changes the entire dynamic. And so there's this sort of fundamental question: if you want to be investing in venture capital, which we do at Bedrock, we invest in all sorts of asset classes, crypto. We do some non-venture stuff, but our bread and butter is early stage venture investing. You sort of have to make a decision of whether you want to be a feeder fund for one of these huge, massive, multi-strategy crossover funds, if you want to exist to feed them deals, or if you want to be what I would term a feedee, which is a word not commonly used in the English language, but if you want to actually be finding things that others just aren't looking at, and vibing with entrepreneurs and getting to things a little bit sooner, and not relying on crossover funds to mark your deals up. And so we've sort of chosen the latter path. And so you have to constantly differentiate sort of how you operate in order to keep moving forward.
Now, we're going to get into the temp checks. I don't want to go too off course here, but I did have a question for you, which, you just mentioned the feeder funds and you said marked up. My question is, are the best companies the ones that always get funded in venture? And the place I'm coming from is that, there's paradigms in all of these industries, like Hollywood, right? So from the outside looking in, you'd think that the best movies are the ones that get funded. But in reality, a lot of times it's the internal industry power dynamics that are what's driving a movie to get funded, right? So it's an agent who's got a favor to call in from a studio head or something like that, or like Robert Moses in New York. If you read The Power Broker, you find out that bridges and roads actually aren't built on the best urban planning design, and it really was him just flexing his muscles. So my question is, how much of that dynamic is in play, kind of behind the scenes in venture, where deals, which are really just companies getting funded, are getting marked up as kind of the internal industry power dynamics, if at all?
I think that it exists. I think it exists to like a much lesser extent than it does in the entertainment industry. There is something special about technology in which you really can create a breakthrough product that just sort of really wows and really can't be replicated. And yeah, you can write a script in Hollywood that really wows, but there are just so many layers of gatekeepers. I feel like in Hollywood there aren't like Hollywood producers that are just constantly trying to identify new up and coming screenwriters. There's sort of a lot of layers of gatekeeping. You still sort of need an agent to get your work out there. There's sort of all of these layers of gatekeeping. You need a agent, then you need a business manager, then you need a studio, that sort of producers, sort of all of these layers. I feel like in technology and in Silicon Valley writ large, there are certainly far fewer gatekeepers, and because it is so competitive, and quite honestly, less monopolistic than the entertainment industry at this point. I mean, I think at this point you've got a few big players, Netflix, Disney, a few others really completely dominating. Certainly, television, the television format certainly really dominated. So there's a lot of room for sort of gatekeeping and filtering things out because it's so monopolistic. Whereas I think venture capital is almost the opposite. It's so hyper competitive that you have to be as an investor open to meeting new crazy people, entertaining new crazy technologies, and digging into them. And then there is something intrinsic about you just being wowed by a product that can't be replicated, which is something that just happens time and time again for me as an investor, and it's what makes it so fun. And so I think it's less true here. That said, I think when you get to the later stages, we've had this experiment that's been playing out for the better part of 5 years now, starting with really the SoftBank Vision Fund, where if you just, the thesis has been, if you just pour a ton of capital into one company in a competitive market, that company can use the capital as a weapon to really win the market and crush all the competitors. And I think in some markets that's worked and really played out. I think in some of the more enterprise SaaS markets, that's worked quite powerfully, like UiPath would be an interesting example. Snowflake, arguably, there's a version of that strategy that they pursued. And then I think it's worked far less well in many of these other categories. So one of the categories that we've sort of coined a narrative mirage is the scooter sharing category, where you have all of these hyper well-funded competitors. And then there are a few like Bird and Lime that just got, raised a ton of capital really quickly. I think record-setting amounts of capital really quickly. And ultimately, I'm a huge fan of the Bird team and know the founder there and think super highly of them. And I'm really excited for their success. Those businesses just aren't going to be that big, I don't think, despite all of the capital that's been poured into them. And so I think the capital can't make a company in the same way that it can make a Marvel movie. I think there is something different about the dynamics here.
That's really interesting. I mean, kind of what I parse from that is that it's more meritocratic and it's easier to track because there's a lot more. I mean, obviously you touched on the tangible aspects of a product that wows you, but in terms of sales numbers or usage numbers, whatever the company uses to track their North Star, that's a lot harder to fudge. Whereas, in the entertainment industry, the results are after the fact, or in politics, it's not even actually really measured in any sense. That's kind of what I took from that answer.
That's a really good point. Yeah, it's all qualitative. So it's all in the entertainment industry, it's all judgment, it's all qualitative. There's sort of no quantitative element to what ends up getting funded. I'd say in venture, it tends to oscillate between highly qualitative and highly quantitative. It tends to be highly qualitative at the earlier stages. So maybe there is still, some gatekeeping there, but then there is this tangible technology element, which is just different from words on a page as a script or something like that. And then as you get later and later stage and have numbers, it becomes quite quantitative. And so it's the mix of qualitative and quantitative that I think makes investing in companies very different from investing in sort of entertainment industry type projects. That's a great insight, Geoff.
Thank you. What drives you as an investor? What made you want to become an investor? And then every day getting out of bed, what is it that drives you?
Well, it's evolved over the years. So, I wish I had this really pithy answer that sort of, would be a really good soundbite. But the reality is, in the early days of me being an investor, it was quite honestly a sense that I wasn't very good at building these companies. So I tried with Topguest, and we ended up getting to a pretty decent, outcome, but it wasn't life-changing for anyone other than me. I think I'd been very poor up until then and made enough money to sort of not have to stress about being poor afterwards. But while I was building that company, out of the corner of my eye, had seen things like Uber, things like Airbnb. This was like 2011, 2012, really starting to gain momentum and traction, got really excited about several of these businesses. I'd earlier tried to get a job at Facebook unsuccessfully in like 2007. And so I sort of felt like I had an eye for businesses that were really breaking out, this sort of visceral sense around companies that I thought were going to be really big. And so I felt like, I tried my hand at being a company builder myself, felt like I wasn't really that well suited to it, but hypothesized that I'd be good at investing in these companies. And quite honestly, there'd be a good way to earn money. As someone who grew up quite, lower middle class, that was something that was important to me early on. And now over the years, it's really morphed into a motivation of really feeling like by doing what we do at Bedrock, we can really help bend reality. We can bend the way the world will operate in the future through choosing who we back, through the companies we get involved with, through the ways in which we, interface with our entrepreneurs, we can, in a small way, help these companies really bend reality by sheer force of will. And that's a very motivating type dynamic. We call our mission In Search of Narrative Violations, and it is really what animates myself and animates our firm. And it at this point really is not about really the money as the motivator. The money is sort of just how we keep score internally. It is about really unearthing these really extraordinary entrepreneurs and trying to help them bend reality.
The thing I like about that answer is it's also consistent with some of the thoughts that you've put out in the world, specifically a tweet that I'm thinking of where you said something to the effect of, it took me 15 years, but now I have complete independence to work with people and that I want to work with and ideas I want to work with. So I mean, that's the thing that I've followed you for a while and conversed with you a little bit. But the thing that impresses me is that through line where, you are working to actually make the world a better place, opposed to just trying to increase your IRR so you can brag about it at the tee box at the country club. At least that's the impression I get.
I don't even golf, and I don't think I've ever been to a country club, to be honest with you. I was at one for a wedding once, but yes, I'm not very good at golf.
Who are the investors, or maybe it's just one that you really look up to or want to mold your investing style towards, or that just inspire you in general?
Yeah, it's I don't really think we can successfully sort of copy others. That's never really been my MO, and it's not our MO here at Bedrock. That said, I have been very focused on what these crossover funds have been doing. I think Altimeter, Brad over there, and what he's done. He's not someone who I know, super well personally, but I think what he's done. I remember when I was building my travel startup, Topguest, I think he was sort of just a travel angel investor who'd started a few companies, managing a small fund, and he now has this sort of massive fund that he's running and has been just very savvy with investments and things like Snowflake. So certainly look up to him. I think what Dragoneer has done has been super smart. And then obviously Tiger. So basically I've got these crossover funds on my mind. I think what they've done has been just brilliant. They've managed to, I think, quite honestly, displace the top tier venture firms as being sort of the capital partner of choice for later stage high growth companies. And I'm really glad we focus earlier stage, because I really wouldn't want to be competing head to head with these folks. Then there are these sort of other like random people nobody's ever heard of who, either sort of these sort of unknown angel investors that no one knows, or these cryptocurrency traders that no one knows, no one would have heard of them. But folks who manage to just do this independently off their own balance sheet, starting from almost nothing. I know a few of them, and I really look up to them. I don't think that we can really replicate what anyone else is doing. We have to sort of write our own playbook here, but those are a few folks I admire.
It certainly sounds like you're coming from first principles in your investing style, and I think that narrative violations is certainly an original idea. And then if you read the letter, it's very clear. But let's get into the temp check. So you haven't done as many temp checks recently as you were doing this time last year. Let's start from the back. What are maybe the one or two of your favorite temp checks that you did that you think are perhaps the most poignant, or just the ones you look back on and say, I really nailed that one?
Well, they quite honestly, they're always sort of stream of consciousness. They're not really that planned out. I might spend a few minutes jotting down some notes beforehand. So, I think retrospectively, the ones that seem to have really struck a chord. There was one where I talked about self-actualization, and I sort of was critiquing the venture industry, and that I feel like a lot of venture capitalists are very unhappy people because they're constantly trying to self-actualize through the investments that they're making, and in reality, You can't self-actualize by giving someone else money. That's not a path towards self-actualization. So it's sort of this high status. It's sort of this high status career path. So being a VC is sort of relatively high status, and then it's a sort of low self-actualization career path. And so I think that leads to just a lot of very unhappy venture capitalists. And I think I titled that episode of Temp Check, coming out of the VC closet. And that's where I sort of came out of the closet and said, you know what, I'm not a venture capitalist because I'm not trying to self-actualize through the investing. And that one's really struck a chord with entrepreneurs, that's really my target audience with these videos. It's entrepreneurs. And that one really struck a chord and is just honestly very true to who I am and how I think about things. And then ultimately a friend of mine, this guy, Hunter Horsley, who runs Bitwise, he was like, yeah, you know what? You're not a venture capitalist, you're a vibe capitalist. And so I've taken that on as my professional identity. So thank you, Hunter, for helping me. I sort of find an accurate identifier for my professional self. So that was one. Another that I'm really very keen on continuing to explore and talk with folks about is this idea of algorithmic governance that I did a temp check on, where I feel like we're still in the early innings of this transition toward sort of a much more algorithmic governance type future, where it's actually much less about personalities and humans and sort of voting for a person, and becomes over time more about being governed informally and ultimately formally by algorithms. And I think there's a crypto version of that. There's an AI version of that. And there's a sort of centralized software version of that. But I think the one on algorithmic governance is one that I'm going to continue to develop and speak much more about over the coming years.
Now that one was a bit abstracted. So when you talk about the informal piece, are you referring to the algorithms that govern social media feeds as driving or as upstream of actual governance decisions, whether that be, in state capitals, in the the Capitol building in the United States, or even in governance decisions down in specific companies? Is that what you're talking about, those algorithms?
Yeah, so I think culture is upstream of politics, and I think the Twitter algorithm is upstream of culture. So I think it's arguably and arguably maybe the TikTok algorithm and the YouTube algorithm. There's a set of these algorithms that are actually upstream, I believe, of culture, and so that actually means that you can have these sort of cultural influencer individuals can end up, through leveraging the algorithms correctly, just wielding tremendous influence on culture, which ultimately politics is downstream of. And so there is this sort of weird algorithmic governance, informal thing that's already playing out. There are sort of several current examples that come to mind that we could talk about a little bit, but
yeah, fire away.
You sort of have this is not my original idea. I met someone at this event in Austin the other day, and really got me thinking about Mr. Beast and what Mr. Beast has been able to do with rolling out sort of the national hamburger chain. I think it's now one of the biggest fast food delivery businesses in the United States. He gained all of his power through these social media algorithms. And this person that I was talking to was like, it wouldn't be so crazy for one day Mr. Beast to actually, have some sovereignty over a territory or something, because he has so much power from the algorithms. And I think that type of thing is something we'll see. If he can launch sort of a McDonald's competitor in like a few weeks, why can't he gain sovereignty over, or pseudo sovereignty over, like, a part of South Central Los Angeles or something like that. I think another example might be, some of my friends recently moved to Miami and have done a really good job of leveraging the Twitter algorithm to, I think, create kind of a pretty real mass movement of folks to Miami and technology folks to Miami. And I think that's kind of an example of, and certainly the mayor of Miami seems to spend a lot of time on Twitter. It's kind of an example of you've got the algorithm. The mayor of Miami, maybe Francis Suarez, sort of identified that the algorithms are upstream of culture and therefore upstream of politics. And so you kind of have to master the Twitter algorithm to really have maximum influence. And so I think there's a sense in which this whole movement to Miami is basically just driven by Twitter. And it seems maybe on one level really silly, but on the other just kind of seems like the future and very powerful. Like they've tapped into something quite powerful there.
Yeah, the meme becomes reality in these algorithms. I think that's kind of what I take away from that. Let's actually go down this side street here really quick. So you're Austin plus plus. You're in Austin. What went into that decision and why not Miami? I need the cheap headline here.
Well, I've always I've always felt like Miami is a place that really the thing that folks care about the most is how much money you're spending. And so that's sort of been my view on Miami. Is it's sort of that's what's culturally historically, and I think that could very well change. There's some phenomenal folks that have moved there that are really focused on building, and I think are going to potentially really change the culture. But I think the pre-existing culture has been the one that I've been familiar with, at least from just vacationing there, has been it's all about glitz and how much money you're spending. And I'm pretty cheap. I don't really like to spend that much money, and so I don't want to have to compete on yacht size and how many Lambos I own. I'd sort of rather just focus on building Bedrock and investing and sort of a bit more of a low key type day-to-day like IRL existence. And so really just personal preference on my end. And if I see the culture in Miami really change, I mean, I'd be open to revisiting the decision, but thus far I'm really liking being based out of Texas.
That's that's a great answer. I'm very frugal as well. I think anyone that knows me will tell you that. So I respect that answer. I think the one thing that kind of comes to my mind is maybe the type of company is different in Austin versus Miami. And I think that kind of a crude metaphor for this is that you kind of have tower companies like Salesforce, right? So they're in skyscrapers. Companies in New York are in skyscrapers, and then down in the peninsula in the Bay Area and obviously in Texas where there's a lot more land, you have campus companies. And I've always kind of wondered what the cultural trade-offs or cultural differences are in those two. And I kind of get the sense that, big companies in Miami are going to have to be in towers, and that big companies in Austin will have the ability to build big campuses. Do you have any thoughts on the type of companies that could be in Miami versus Austin? And then any any thought on my idea there between those two?
Fascinating cut, Geoff, on the sort of the real estate footprint and how that might be influenced by the cities. That's something I actually haven't thought about, but let's talk about that a little bit. I mean, I think as a starting point for me, my basic starting point is that I think the Miami movement is really driven by Twitter. And so I'd imagine companies that leverage Twitter to get distribution or get momentum, that the folks that are moving to Miami would be inclined to start companies that are kind of using Twitter to get momentum. And so that might be more e-commerce type stuff, consumer internet type things. That would be my hypothesis. It remains to be seen, but that'd be my hypothesis on sort of the new companies there. I think Austin, there's actually a pretty wide range of really interesting early stage companies here that I've been really impressed to identify. Our largest investment at Bedrock is this company Workrise that I serve on the board of. I was the first investor in the company way back when, and we've continued to invest over basically all their rounds here at Bedrock. The wrap on Austin with them had always been that it's a city where young people move to sort of semi-retire. So you move here to sort of work 9 to 5 at a satellite office for Facebook or Google or Amazon, and then spend your weekends out paddleboarding on the lake and hiking in hill country and eating a lot of barbecue and things like that, smoking a lot of weed maybe, and then in practice, I really do think the city has radically changed over the past year. I see a lot of talented young people moving here, building, starting companies. The same might be true of Miami. I haven't been there recently, so I don't know. The same might be true of both cities. And then ultimately, I do believe that we are now in a context where the companies are just going to be all over the place. So I think whether you're living in San Francisco or New York or Miami or Austin or Atlanta or Denver, if you're an investor, you have to travel to go meet the companies. You have to travel to go find the companies. And I think when the companies get really big, they'll come to you. So if you live in Miami, and you're willing to write a $200 million check, and there are like 5 crossover funds that have offices in Miami, maybe founders will go there. But at the earlier stages where we tend to play, you have to get on a plane and go meet the founders. And Austin seems as good a place as any to hop a plane and go meet people wherever they are. In terms of the real estate footprint, you've touched on something that I really believe in, which is that for early stage companies, I don't really believe in this remote future. I think we're very quickly shifting now that COVID seems to be receding in the United States, knock on wood, back to an in-office type way of building companies. And so I think I think both cities probably have a lot of good real estate for a few dozen people in the early days, and then the reality is there are a lot of towers being built in Austin too. I mean, I'm looking out the window right now. There are like 7 or 8 skyscrapers under construction, but there's a lot of land in Texas. There's like a lot of room to build campuses. The Gigafactory here has gone up in 12 or 14 months. It's almost done now. That's a massive campus. And I think that's a pretty interesting point. I'm not really sure that the era of large corporate campuses is going to endure, though. I do kind of have the sense that as companies scale, they're just going to have several smaller offices in different cities, because I think people are going to sort of choose to live all over. I don't think there's going to be this one Schelling point like there was historically in the Bay Area on a look-ahead basis.
Now, you've given these 5 predictions. Well, it was actually 6 in the temp check about what's going to happen in the next 5 years at the least. And I think the 4th one was the narrative mirage of remote work, which you just touched on. And then the 6th one, the kind of bonus one, was the de-urbanization, a campus company that I am kind of obsessed with. Just in the history of it was ESPN. Right. So you have, this cultural behemoth based out of Bristol, Connecticut, which is, basically over an hour away from a major city. How does that happen? And I mean, that couldn't happen today. Right. So, are you going to get the most talented employees to go live in Bristol, Connecticut? I don't know about that. But in terms of the outskirts of Austin, that could be. As kind of the third point in terms of the difference between the two cities. The other thing I think about is culture, right? So you kind of touched on that. When I went to San Francisco, and I lived there for a couple of years, I remember showing up and going to Haight-Ashbury and wondering where are all the hippies. They were all gone. And my favorite band is The Doors. I'm a big fan of that culture. Although I wouldn't say that that I would necessarily fit in with the hippies, but I wanted to certainly see what was going on. And it seemed that the summer of love was far gone. Austin certainly gives me those vibes that there is kind of a more laid back attitude there. And I do wonder, how much of that is conducive to company building, whereas, you see Miami being kind of described as a mini New York, which is obviously a lot more corporate, a lot more fast paced. And kind of the last thing I'll say there is I wholeheartedly buy into your idea around small teams needing the proximity. Anecdotally, when I was with DoorDash in DC, the team was 3 people and we were working out of a house in a residential neighborhood. Long story short, we got too big and we're onboarding too many drivers and got booted from the neighbors weren't too happy about it. But then, where a lot of the kind of like osmosis and mixing of ideas came from was just a mini basketball hoop in the second office. It would be, 8, 9 o'clock at night and you just shooting hoops, talking about ideas, how to make the company better. Is that culture piece whether it's the macro culture that I just touched on or even the micro culture, like how that macro influences the micro, is that piece another big part of the equation for you when you look at that landscape?
Yeah, I think there's 2 cuts on it. And I think different people are different, to state the obvious. So I think there's a type of person who's most creative when they're surrounded by this kinetic energy of sort of a dense city with lots of really ambitious people, and it's this hyper networked, hyper social type of way to get inspiration and build. And I think a city like New York is perfect for that. And certainly in my 20s and I'm sort of in my mid 30s now, but in my 20s and earlier 30s, I always thrived off of that sort of New York energy. That's why we chose to start Bedrock in New York and still have a presence there. And then there's another type of person who really wants a more boring environment and sort of does their best work in a more boring environment. And as I've grown a little bit older, I've actually, I think, really changed. And I feel like I personally thrive and do my best work in a city that's a little less hectic, or an environment that's a little less hectic. I was living in rural Hawaii for almost 10 months during COVID. And
yeah, which island were you on?
Kauai. Now that I'm not there anymore, it's safe for me to share. So that's a big reveal here. But in any case, and basically my model is I like to sort of have a calm, sort of quiet, like laid back, lots of space, not a ton of activity, home base to really where I want to focus on sort of deep, intensive research, work, etc. And then I'm always keen to travel, to go be social and meet entrepreneurs, and then Austin itself presents a lot of opportunity for that as well. But I do continue to think that the best sort of geographical equation for a startup is to be in a relatively boring place, but have like a really vibrant internal team culture where you sort of make the boring place fun. And so I've always personally felt like the San Francisco Bay Area is a very boring place. That's my personal view. I think San Francisco has been for the last decade pretty devoid of culture, has been quite boring. And I think that's one of the things that made it work as a place to start companies, is it wasn't New York. And then I think, at the same time, a lot of great companies have been started out of New York. So I think there's different types of people. They thrive in different environments, but ultimately I'm somewhat biased toward companies that are, maybe the city that they're in is kind of irrelevant because they have such a vibrant internal culture that it doesn't really matter. They make wherever they're at fun. And I kind of, that's kind of how I am.
The peninsula in the Bay Area where a lot of these companies, massive tech companies have been started and are located, is certainly a boring place. And I think that, to your point around the internal culture, if you watch the old videos of the Facebook office where, Zuckerberg he's got the solo cup in his hand and he's like, he's probably not even 21 and they've got the keg going while they're, half the team is locked in writing code. I mean, you basically just described that. At least that's what just popped into my mind, because you step outside those offices and there's really not much. Palo Alto, there's not much of a nightlife. So I think that's a really interesting insight. We just spent a lot of time on that. Let's go back. You said that there were you were thinking about future predictions around algorithmic governance. What are those future predictions?
Well, my future predictions are basically that you're going to have these, I think in the midterm, folks like Mr. Beast, like AOC on the left, or like Candace Owens on the right, who are already in politics, but the politicians who've really mastered gaining reach through these algorithmic platforms are going to increasingly dominate our politics over the years to come. So that's sort of the midterm prediction. And then the longer term prediction is that we're in really day one of technology interfacing with government, and there's going to be, I think, dozens of very valuable technology companies that end up powering large swaths of our society via selling into the government. And there's certainly a first wave of those companies now. We're invested in some of them at Bedrock, and I think there's just going to be many more to come. But I think the most pronounced change that's going to have the most sort of jarring impact on society over the next decade will be, the rise of these algorithmically driven political figures who end up amassing tremendous power because of their reach on these social media platforms.
That reminds me of, the first guest on this show, and longtime listeners will know, Martin Gurry, and in his book, Revolt of the Public, the fact that the government is still a 20th century, it's organized in 20th century fashion and in a very hierarchical fashion, and that in order to actually meet the needs of a citizenry that is more technologically advanced than the government itself, they're going to have to adapt. And I think that, you're right. A lot of these companies who are on the bleeding edge of this stuff are going to be the ones to kind of pull the government forward. One thing that I think for me is probably the most important in any of your predictions in the Temp Checks is hyperinflation. And you were talking about this, a year ago, over a year ago now. And I know that doing my homework, you caveat that you're not an economist, but, you made this prediction before a lot of economists. I mean, you really can't just print trillions of dollars without it coming home to roost, at least in a rudimentary understanding of economics. So what is kind of, let's take your temperature on the status of what you described as hyperinflation, and how does that play into the future here?
Yeah, I mean, just sort of going one layer more abstract to start. I think really what the sort of COVID crisis and I think that the most pronounced part of the crisis in the West has been just the broad failure of governments and institutions to correctly manage society through the crisis. And so I think basically, there's no room of smart guys in skinny ties who know all the answers. Everyone's just a fuck up or something like that. And so I think what that means is basically the universe of outcomes that we can have in society and the world is just much broader than anyone thinks. And I think that the writing was on the wall from the first stimulus package in the U.S. that ultimately there was going to be some form of inflation over the years to come, and it's the type of thing that you don't really realize it's happening while it's happening. It's only in retrospect where it's like, wow, things have been very inflationary. On inflation, I think the whole way in which we measure inflation is actually pretty screwed up. So I think there's sort of these it's like this household items basket of the everyday things you buy. And, the prices on those hadn't gone up very much. Now it seems like they're starting to go up. Things like lumber, people argue, well, it's just there's no shortage of timber. It's just the lumber, and it's a sawmills issue or something like that. And I'm always very skeptical of these sort of, it's just transitory, or it's just this one-off thing, because you have these one-off things happening in all of these different categories. And something that's never taken into account in any sort of economic inflation measures is sort of how much it costs to buy a home. And I feel like sort of viscerally, housing prices to me have always felt very correlated with inflation, even though formally any economist would say that they're not, and they have nothing to do with inflation. And definitely housing prices in everywhere in America, and I think around the world, have increased dramatically over the past year. And I think that's a pretty big problem going forward.
Also, the price of cars have if you look at it over time, over the past 20 years, they've I think I saw someone write that they've doubled at least.
And people would argue that's just this chip shortage, just like this one-off chip shortage, and I think that's just BS. I think it's sort of like we are in just this inflationary environment. Yeah, I hadn't owned a car for a really long time. I went to buy a car, and I was like stunned at how expensive cars are. It's really crazy.
They are, and I know that you've also spoken to kind of the role that policymakers, specifically the Fed, sees themselves as simply, I guess you could say, storytellers. I don't think that's exactly how you put it, but I mean, Alexander Hamilton wrote in his papers describing the role of the Treasury, and specifically, the bank as well, that the job of the heads of those institutions was actually to manage confidence, and that confidence, Madison said this as well, that confidence was worth more than any amount of currency that could be issued. And so my question is, has the dog kind of caught the car and they don't know what to do, where, they're out of words to say, and that now, it's clear that we failed the marshmallow test, and somebody has to fix this, because it seems like, and I think you're the one that pointed out that they've quietly been saying that this is going to be an issue, but the actual statements that make the headlines are the ones that kind of soothe over the fears, I guess, when exactly what you just said. They say it's transitory. So what are your thoughts on that?
Yeah, well, I mean, the watchword or buzzword that Powell, of the Fed keeps using is transitory. The inflation's just transitory. It's only transitory. Don't worry about it. Transitory inflation. If you actually go back to the root of what transitory means, it's from the Latin transitorius, which I think means something like allowing passage through or to cross over. And I would actually sort of, take the word a little bit further and say that we've sort of crossed the transom from being able to have any confidence in what these people are telling us. And I think people, certainly younger folks, so certainly Zoomers and folks in their late teens or early 20s, I don't think they have any confidence at all in anything these authority figures say. I think we've transitioned, we've crossed the transom from a world where we could trust the people leading us to generally be telling us the truth, or at least we thought we could, to everyone has to just create a mental model of the world from first principles themselves. And the people who have the best mental models that are most accurate will do great. And if you have a mental model that relies on what folks like the chairman of the Fed are saying, you're gonna run into a lot of problems. And so certainly to me, the word transitory is a very alarming word.
I mean, this is what I'm obsessed with, is that I'm obsessed with information, which is why I love Martin Gurry's book so much. And, he was ahead of the curve on this stuff written in 2014. Exactly what you're talking about is, now that we can see, we have transparency, we can see for ourselves what they're saying, and that they are not infallible. It's now impossible to govern like that, and they just haven't figured it out. You just mentioned the mental model. One of my favorite temp checks of yours, which was, if you have a cohesive worldview today, you're in the new 0.01%. What did you exactly mean by that? And do you have a cohesive worldview?
I do. It's not really safe to share here today, but I do have one. I'd say that what I meant is I do really believe that there are, because there's sort of no centralized model of reality that the majority of society buys into, you can have these sort of random individuals or small groups of people that form these cohesive worldviews, and they're actually going to be able to accrue a lot of power and influence outside of the institutional frameworks that have sort of defined society for my entire lifetime. And so I think that so basically I think if you have a cohesive worldview and you're able to get people to buy into it and come along with you, you can actually financially speaking become part of the 0.1%. I think it is increasingly going to be defined by one's clarity of thought, one's ability to think from first principles, to get people behind a model of reality. Because I think the centralized models of reality have all been proven to be false, and increasingly it's just going to be this very decentralized range of groups that'll have their own models of the future and reality, and the right ones the ones that are most right will do extraordinarily well and will thrive.
So you can't give us your specific cohesive worldview, but could you unpack the word cohesive? Because in my mind, it's still a little murky in terms of are you talking about? And I know in the temp check, you said, why did Twitter go down, I believe, and then there was another event that you connected it to. I'm blanking out, but they were two completely uncorrelated events to the naked eye. So are you speaking about kind of a macro worldview, or are you saying like kind of the value set that you hold specifically to yourself?
Well, certainly one has to have a set of personal values, and that's something that's always been very important to me. Honor is one that matters a lot to me, as a sort of a core value. I'd say that I have a pretty bleak, pessimistic worldview for the macro over the next 20, 30 years. I think it's going to be one that's defined by much more geopolitical conflict than we've experienced to date during in my lifetime. And I think it's things are going to get, there's going to be a lot more conflict. I think you're going to have these sort of increasing frequency of these episodes of sort of mass insanity, and these crazy psychosocial movements are sort of going to come with increasing frequency over the years to come. And then this sort of like bleak view that I have, I don't want to get into all the nuances of what I believe and why, but this bleak view that I have is actually sort of counteracted by this incredible optimism I have around technology and the ways in which technology and entrepreneurs can actually help solve some of these problems, offset some of the issues that I anticipate we're going to face as societies over the decades to come. And I feel like we're really well positioned at Bedrock to invest in these teams and these folks. And so I'm weirdly, really pessimistic on a lot of the macro stuff, and then pretty optimistic on the micro stuff, because I feel like we can actually deploy capital against specific projects to solve the problems that I think we're going to be facing. And so it's this sort of combination of being optimistic and pessimistic.
I like that. I think that thinking from first principles is essential, because at least at an anecdotal level, and if you take a really wide lens view of the world, the Pax Americana, and specifically the post-Cold War order of the last 30 years is certainly an aberration in terms of wealth and peace, the lack of violence. I think that a lot of people like to think that the world is a lot more violent today than it is relative to the past. I think that we're, generally speaking, in the greatest time to live in human history. But to your point, if you look at the past examples, usually that doesn't last very long. I mean, I think the Roaring 20s, no one in America would have expected what was to come only 15 years down the line. So I think that's a really interesting way to look at it. I think, connecting the dots to earlier in the conversation, you're deploying capital in these opportunities to solve some of those problems. Why don't you give us, if you can, give us a little teaser of the temp checks to come that you've been chewing on right now?
Let's see. I don't actually have like a running list. I don't have a running list in front of me, but there will be there'll be some new ones dropping soon, but I can't really give you any previews right now.
Okay. We'll give you the last question here is performative lunacy versus performative sanity. You kind of changed your tune last fall and said that performative sanity was actually the best play. Do you still feel that that's the case?
Well, it's all about these things are always on a moment. There's always a time scale to these things, and so there was this phase in the spring and early summer where I felt like you could sort of do this fake lunacy thing. Could actually be very valuable. Culturally, we were in a moment where there was a lot of insane stuff happening, and there was sort of a way to take advantage of that. I'd say that generally speaking, there's moments in time when one should feign craziness, and there's in business, and there's moments in time when one might feel crazy, and you should keep your shit together and feign lunacy feign sanity, pardon me, during those moments in time. And so I think where it really, practically speaking, for entrepreneurs matters is in business negotiations. And so there's something very powerful in a business negotiation where when one party feels that the counterparty is insane. And so if you're trying to get a deal done, and then the counterparty that you're negotiating with just seems really crazy, seems really idiosyncratic, seems really unpredictable. There's this way in which that can be very powerful for that person in a negotiation, and then conversely, there's other types of negotiations or transactions where you want to just be very level and very sane. And so I think it's always context dependent, but I think both play a role, and I think faking lunacy is a tactic that many of today's very successful entrepreneurs and folks in society have leveraged time and time again.
So it's good to have both in the repertoire, depending on the context.
Well, if you have both, if you're able to actually have both, you're not actually insane. So that's kind of the bellwether, is if you're able to consciously know what mode you're in and why.
But you did say that sociopaths in one temp check, that they are at somewhat of an advantage inherently. Not that you said it's a good thing, but somewhat at an advantage inherently in starting a world-changing business from an entrepreneurial standpoint.
I do believe that they are. It's tricky because they're very difficult to work with, and then there's certainly lots of amazing entrepreneurs that we've invested in that I don't think are sociopathic. So you definitely don't have to be a sociopath. So I don't want to like misspeak here. You definitely don't have to be a sociopath. And personally speaking, I prefer if you're not. If we're going to work together, I'd prefer that you're not a sociopath. That's my personal preference. But yeah, I think what you're really touching on, Geoff, so I really appreciate that it seems like you've really watched the temp checks very closely, and you've watched them in the correct way, which is you've watched them as a canon of work. And I like to think of them as they're not standalone, so that they're all these short videos, but they're not meant to sort of stand alone. They are meant to actually be consumed as a canon of work. And it seems like you've done that and have stitched together some of the pieces, but it's the audience that I'm speaking to with these. It's always you always want to try and identify people who are able to draw their own conclusions from these things without me spelling everything out. So I'm always hesitant to say too much about them, but yeah.
I think in conjunction with your Twitter feed, you do get a sense of, you're not telling us what your cohesive worldview is, right? So you're not saying it on this podcast. Hopefully you'll tell me it off air. But if you actually go through the temp checks, and this is why I would push back, and you say you kind of do these things off the cuff. I would push back. I don't know that would. I think that perhaps you put a little bit more thought into these than you lead on, because I think that when you map it over to the written corollary on Twitter, it starts making a lot more sense. And I think that if people don't follow the temp checks on YouTube, they should. I think your channel is just Geoff Lewis, but if you've listened to this podcast and made it this far, that's certainly something you should do. But that's kind of what I get. That's why I think that's why I thought this was going to be an interesting conversation, because I think that kind of paring that back and trying to figure out, okay, what's actually behind the curtain a little bit, because that is your style. You do leave a little bit to be wanted. And I think that makes it interesting, right? And I think that's the vibe capitalist right there. The venture capitalist is just talking about markets and ARR and all that good stuff. But we want the vibes.
Thank you. To get the full vibe, you've got to actually take an investment from Bedrock. So that's sort of the unlock to get the full vibe and the full cohesive worldview is when we invest in your company. So that's the next milestone to get the full picture.
That's the subscription tier.
Correct.
Everything else is free content. Okay. Yes. All right. Well, if I could get this last question here, I think is a great way to tie this all together. The reality dysphoria industrial complex. What is that?
I mean, it's basically how all of the institutions are de facto working in tandem or working synergistically. I don't think it's centrally coordinated, but to paint a vision of reality that's just not accurate, and that's really what it means. And there's sort of all of these examples of it. The most recent one that I'm thinking about, because I was talking with someone about it the other day. They'd listened to someone give a talk about this. Is it sounds like there's been a effective prophylactic for COVID that many researchers have been aware of for the better part of a year. This drug, I think it's called ivermectin, which you can take, and it is very effective in preventing you from getting COVID, and also effective as a therapy. But its patent expired several years ago, so it's sort of really hard to monetize, and drug companies don't make that much money off of it, and it therefore hasn't been accepted by the FDA as a sort of frontline therapy for COVID. And in practice, the anecdotal evidence is that it would actually be very effective. So this is sort of like one narrow example of we've had this crazy pandemic. It's completely upended society. It may be that there's like this very easy to manufacture, very cheap, widely available drug that could have really helped prevent a lot of the disruption that COVID has wrought, that just was not explored because of the financial incentives of the reality distortion industrial complex. I'm not a physician. I'm not a virologist. So I'm certainly in no place to give a great view on that. I'd say the other, there's so many other examples. It's just this sort of all-encompassing, basically any large institution with a lot of power, it's just really all about what are their financial incentives, and they're going to deploy capital to try to mold your vision of reality, your perception of reality, to fit their incentives. And as a sort of individual, one has to constantly be fighting against that, constantly be trying to form your own view of the world, and not be susceptible to this reality dysphoria industrial complex.
It certainly reminds me of what we call on this show the narrative monopoly. I think that those are orthogonally related. I will say in that the distribution piece of the reality dysphoria industrial complex flows through the narrative.
What is the narrative monopoly?
The narrative monopoly is this paradigm in the information sphere, specifically in America is what I'm talking about, where narratives that do not fit the narratives that do not become monopolized are immediately pushed out by those who have a monopoly on the distribution. And so what I mean by that is, a lot of times people talk about how specifically the news media has lost power because Facebook and Twitter own the pipes. But in reality, people actually have to create content and have to actually disseminate information. And there is a monopoly on the information that comes in the form of a narrative. And so that is formed by the macro incentives that have to do with, the corporations that actually put out these grand narratives. And then the micro incentives is that, if you work in this information industry, the actual opportunities to you are incredibly limited. And so if you do not comply with the monopolized narratives, here's what the story is, then you will be pushed out, and all of a sudden your career opportunity is gone. There's not much opportunity elsewhere. And so I think that a great example of this was masks at the beginning of the pandemic. The narrative was masks don't work. And the reason why we know this is a monopoly is because the truth was so clear to the opposite, and yet the narrative was so overpowering that masks don't work, that you had the top infectious disease doctor in the country relaying this narrative. You had every single major media outlet, you had corporations, you had basically anyone of power in a lot of these institutions that you talk about repeating this line that we know it was just basic common sense, obviously a mask. If you just think about it, in the most common idea of this is, if I sneeze and I'm wearing a mask, that's probably going to prevent the person next to me from inhaling the things, whatever disease I may carry from that sneeze. And so I think that you have to view these things as a monopoly. And I think that the only way to succeed in this crazy world, personally, is to understand that this monopoly exists, and understand that we inherently view the world through narratives. And, the way to, and this is why I wanted to have you on with narrative violations, the way to be successful is to understand that these narratives are not necessarily just intrinsically valuable. They're manufactured. And then, there is a whole host of people who are incentivized to see their specific narratives maintain their monopoly. So I know that I get a little bit high level with that answer, and that's on purpose. But hopefully that serves as a clear enough answer that you get what I'm talking about.
Yeah, well, you're speaking my language, so absolutely.
Great. All right, Geoff, any closing thoughts?
Keep doing what you're doing. Fight against the narrative monopoly. I think it's a very noble mission.
I appreciate it. Well, thanks for coming on, Geoff.
My pleasure. Thanks for having me.
And there you have it. That was the episode with Geoff Lewis. I had that one circled on my calendar for a long time. I do not think that it disappointed. If you made it this far, hopefully you agree. Certainly violated some narratives in there. If this is the first time that you've listened, please hit subscribe. That would be very helpful. We have a great slate of shows coming up, scheduled out into June, and also have a ton in the can that'll actually take us through June. So I think that the show is going to continue to gain momentum, continue to climb up the charts, almost crack the top 100 in the news commentary division for the United States on Apple, and actually crack the top 10 in a few Western European countries, including Spain. So for whatever reason, they love the narrative monopoly. And if you are still listening, please leave a 5-star review, a written 5-star review, so we can crack that top 100. Started from nothing and almost in the top 100 for the United States. So again, have a full slate coming up. Really appreciate you listening, and we'll see you next time.